Hi, this is Randy Finney with Right Side of the Chart, and this is a closing market wrap for the week ending Friday, October 25th, 2019. I'll start out here looking at the broad markets via QQQ and SPY. We had QQQ and XLK both make new highs, very slight marginal new highs of few pennies over the previous highs back on July 26th, but yet that gives us those those divergent highs. We got close enough. The markets were on to pop that. SPY hasn't yet. SPY is still a little bit above here. We'll take a look at that. Slightly below, but again, when you get this close, when you're in striking distance like that, it's likely you're going to punch on through there. So it remains just a matter of to me, whether we're going to go up, fractionally anything less than 1%, maybe 2-3%. The divergences are still very much intact, so nothing's changed in the last several months. We still have the divergences, so if SPY wants to punch through, where is that high? Right here. That would be high of 302.63. We closed at 301.60. So for all intents and purposes, you have pretty much flatline divergence. You have pretty much a triple top high. You don't have to go down to the pennies. That's not really significant. But the near-term momentum is up. Volume has been dropping off, and that's also a tell. I've covered my low volume indicators before. Maybe I'll jump over to that in a second here, but you can see how volume's been declining on this rise right here, just as it was back here into the lows before you get the top. So that's something to note. Usually you'll see volumes drop off to an extreme, and like I said, I'll get to that in 1 second. So that's what I'm noting right here on the volume bars, just like you had at this high, this high, this high. And so really nothing's changed in the near-term to long-term outlook. We have divergent highs, or almost another divergent high in SPY, and we don't have any sell signals at this time, not even anything remotely close, because as I like to say, divergences in themselves are merely an indication that a trend change is likely. They're not buy or sell signals. So we'll continue to watch this, and like I said before, I've covered this, that the new highs at SPY have come anywhere from the same day, the reversal came the day after, following day, or anywhere up to a few weeks later. So it's really hard to say. We'll try to again wait to see some sell signals, and then if we get one, because of the scope of these divergences, it could be a pretty powerful sell signal as well, or it could lead to a larger drop. Let's look at the weekly charts real quick. QQQ and XLK continue to backtest those trend lines off the right here, December 26th or 24th lows, and so nothing's changed there. We have 1, 2, 3, fourth consecutive weekly candlestick backtesting. Same story with XLK. Breakdown right here 5 weeks ago, and then 1, 2, 3, 4 weekly candle backtest, and like I said, a slight marginal new high in XLK today. So you have the divergences all the way from the 60-minute chart time frames out to the daily time frames. And on that, let's look at QQQ. Here's a 60-minute chart. There's that price channel that broke down recently, had the drop down here to around the top of this big old gap right there, reversed and back tested, and you can see the the high. We just extend on the 60-minute chart. All we have to do is just extend these. We had divergence at that little high, small divergences. Got a little correction there, and so that's that. So that's it. Near-term uptrend. And the story remains the same, in my opinion. The risk reward profile, there's no sell signals to short, yet there's the risk reward to being long is very poor, because it appears the upside is minimal compared to the downside. So I continue to focus on things such as we had our Bitcoin trade today, GBTC Bitcoin Trust. We went long, what was it, 10 days ago. We hit our first price target today for a 19, almost 20% gain on that one. Hit it to the penny actually, and that was the high so far of the day. 1046 was our first target, and most of that would just happen today. The generic and specialty healthcare stocks, highlighted those about a week or so ago in a video. And we have a handful of those that are already up 50% since then, and almost all of them, or the vast majority, especially those that were actionable by already on a buy signal or buy signal pending that triggered, those are almost all up double digits. And so that's where your opportunities lie, on things other than the mainstream. Remember, those aren't the big pharmas. We're looking at the generic and specialty healthcare stocks, other things, commodities, precious metals. Oh, and that reminds me too. So while you have these from the 60-minute charts daily all the way out to the weekly, you still have the divergence. I mentioned Treasury bonds. yesterday. ZB is the 10-year Treasury bond, and they were down today. But as I said yesterday, if it went down any lower, you're still going to have that divergence intact, and you still very much do. So just as you have the negative divergence on the indexes, you have the positive or bullish divergence here on the Treasury bonds right now, and that's ZB, the long bond, the 30-year bond. Is ZB, I'm sorry, that was ZN we were just on, the 10-year bond. ZB right here is the 30-year bond, and you have the same story. You pretty much match that previous low right here. Here's your divergence line right there, and you put in almost an equal low today. So even if Treasuries tick down next week, if they continue down, which you're at highs. A SPY didn't exactly make a high. Wouldn't surprise me. In fact, I'd lean towards a pop next week, a little high, a little bit more upside, most likely. And so let's just say we gap up or open up tomorrow, rally up at some point in the week, especially early in the week. That could bring Treasuries down like this and simply extend these divergences that are growing. And like I said, this aligns with a bullish outlook for the Treasury bonds, meshes with a bearish outlook for the market because they tend to move inversely. These are risk off, flight to safety assets. Now, as with the equity markets, except in reverse, you have a clear downtrend right now. These are in a downtrend without any buy signals. Like I said before, you have to have a break. Here's one buy signal might come there, or will come if we pop above that trend line. We'll also look for any type of bullish reversal candlestick pattern. So that's pretty much the status quo, or the the current trend is down in Treasuries. And however, we did see some pretty darn bullish developments yesterday and today in the precious metals, but again, I'm going to skip that coverage. I've covered that extensively today on the site, and we may have some official trade ideas coming on with the precious metals soon, so I'm going to skip over that coverage right now in this video. Okay, and here's the low volume indicator. What I like to do is put a 10 period exponential moving average on the volume, and what you're looking at is SPY up top, daily chart of SPY. I just used a simple line chart, and you can just pay attention when you see the volume drop off to noticeably, pretty much to extreme lows. That's what you started to see here. You can see it hitting the red line there, right into the leading up to the October highs. That was the biggest correction we've had throughout the entire bull market since it started back in 2009. The next time we hit that line was right here, just before the top in May. That was the biggest correction of the year right there. And then our second biggest correction right here. That was the next signal triggered right there. And here it is. We've crossed down below that line. So, sometimes you cross below and you can stay there for a little while, like here you did for a while. Sometimes it's more of a one and done thing. So it's just a heads up that institutions aren't buying this rally right now, and that's sort of the takeaway. For whatever reason you want to look at it, it's just, again, it's a red flag for the breakout. So the biggest red flags to me are the negative divergences across all time frames, all the significant frames, 60-minute, daily, weekly, and overbought conditions, and then of course that's the low volume here. You have a similar story on QQQ as well. If I can load QQQ, you can see it there. So here we're at extreme low volume right now. We had crossed that line right there. When we hit this level, we crossed below here, went up for just a couple weeks there, and had a drop there. We hit it right here, and you can see that was right before that big drop. And of course back here as well, just before the big drop off there. So these are things that I'm watching. Before I wrap it up, I know some of you trade futures. Same story. Here's a 60-minute chart of NQ. Let's zoom it in a little bit here for you, and you can see there's a breakout. So what happened today is we did break, and I had mentioned this in the video earlier today that we're going to continue up. We took out 79.80. Today had all the makings of a trend day, where you open up and you rally up and close near the highs. So we broke out at least of that above that 79.80 on NQ level. We've been hitting it enough, and so that'll be a level to watch. Also, do we come back and fail back down below that level? Like I said, coin toss odds, I think next week whether we go up, probably favor, like I said today, I think a little more upside, but again, we'll wait and see what happens, and of course wait for some sell signals. It just this breakout is anything anything but convincing. And of course, as I said, SPY did not break out today. You had just a marginal breakout in QQQ and NQ. I want to find ES for you real quick. There's ES. This is a 60-minute chart. Let me zoom back out a little bit so you can just get the bigger picture there. I know there's a lot of trend lines here, but this is ES on the 60-minute time frame, just wedging higher like this. Wedging higher, there's your divergence line. There's a potential trend line there. I believe it's the same one I covered yesterday. We had a brief move down below it before the open, but as I mentioned in the trading room and in the video today, that happened right before the open. You don't take a breakdown in the futures. It's not impulsive, and that happens right before the open, because at 9:30 a.m. the starters step onto the field. The players, the big boys, the big players, the institutions. They can't trade outside. A lot of them can't. Multi-billion-dollar hedge funds, they can't move around. There's not enough liquidity, so they come in at the opening bell. And if you notice, if you trade often enough, you'll see at 9:30. That's usually when the market goes one way or another, and that's exactly what happened today. So another successful defense of that line, but we continue to wedge higher. So this wedge is getting a little bit long in the tooth, so if it's going to break down, it should do so soon, and that would most likely be next week. But we'll see. We'll, like I said, wait for some sell signals there, and until then, my focus will be on those non-equity market related things such as Bitcoin, precious metals, commodities, natural gas, things like that, crude oil, things that have very little. They're not indexed to the S&P 500 and NASDAQ 100, because when you have these low volume sell signals, if we start to see a broad-based correction or worse, it's going to take most of those stocks down along with it. They're going to come under forced selling, whereas things such as select biotechs and healthcare stocks and Bitcoin and commodities that are not indexed, and the cannabis stocks too. We hit our we've been trading the cannabis stocks. Those have been doing well lately, and they're again not part of the S&P 500 or the NASDAQ 100. So that's where the risk reward looks a lot better right now than the market. But we'll update this next week. We'll see how things open on Monday, and we'll go from there. This has been Randy Finney with Right Side of the Chart. Have a great weekend.